these videos. In tonight's video, we're going to talk a little bit about the Fed and some of the comments that Keven Hassett has been saying, and just kind of do a quick analysis as we move forward. Let's get into tonight's video. Well, welcome everyone. Let's just make a quick announcement. I've been watching the database. I always go over the database. I want to make sure it's running. So we're going to start a little bit later. I've been checking so we weren't behind. So I know it's quarter after, but let's just call it between 10 and quarter after we'll start the show, because it's just at this time it's just not working to get the database fully updated. So welcome everyone. Let's talk a little bit about some of the things that been going on that I've been talking about. We saw a huge rally yesterday. I've been telling you, don't panic. There's plenty of that buy the dip trade is still on. We still have the database on an intermediate level expanding. This market's not over. And while it's been chopping around really since October, I've been talking a lot about this. The result has been just, kind of edging out, making a new high, backing into the range, get down to 68.70. We printed it down into 6,700s on the S&P last week. We expanded the range a little bit, but it's a funny name, but it looks like a caterpillar. I'll show you, but it's just, the market's just chopping along the top. A lot of times, as I was talking about, they can turn into distribution tops, but we went through, if you can go back and watch last night's video, I went through the monthly charts. We got a little bit deeper into the weeds and talking about really what the trends are doing here. And it's come down to this market. We haven't seen one of these for a while. All we've talked about, for the last couple years is Mag 7, and that's it, right? So that's what's driving the market. No longer. You're seeing a lot of things change a little bit, and even Apple has become a bit of a star outside of the AI chart stocks, just because they did such a bad job in AI, they're not considered to be part of it, and so that stock's done better than all the other high-end tech stocks out of the Mag 7. It's relatively has done pretty well. But the results of what is going on, we had another report today, and I've got some stuff on the screen over here. It'll make it fairly easy. But everything, it was interesting that, just assume that the real estate's going to be negative. Well, it came in much better than the mortgage apps, everything. Mortgage apps are up 2.8. So we're really seeing better than expected returns, even on the durable orders, which was expected to be down 2.5%. It was down 1.4, so sort of better than expected, not as bad as expected, however you want to look at it. So, we saw a decent rally at the end of the day, and I'll go into more details on what we're watching and how the markets are trading. They're telling you the story that I've been telling you. As we rallied up to the higher end of the range, we got over that 6,900 level, and I'll do a review because last night's sheets were pretty good that were in the Substack, and what we're really seeing here is the market's just range bound, but still kind of a positive rotation happens. So I won't be an hour and a half tonight. We'll try to get through things. So everybody, do me a favor, if you do have some questions, put them up here early so when I go back and do the Q&A at the end here, I'll be able to capture some of those thoughts. So don't be bashful. So I'm looking at a couple things here from the standpoint of what to expect going forward. Will this rotation trade really start to move? And if it does, how are the followers going to do? So if the Russell and the mid cap are becoming the leaders, what should we expect out of the back end of the market, so to speak, which is the large caps after what 2.5, almost 3 year run on double digit type returns? Phenomenal. I mean, you missed that. I know my background has been for the last couple of decades is, and it frustrates me what I'm about to tell you, and some of you may be part of what's going on here, but you have like 100% return in 2 years, just about compounding. You're compounding at that level, and you look at mutual funds, you look at the advisory community, they're screaming happy because they made 12% because it's over the, better than the average 20-year return. And you can't miss these kind of opportunities when they come up. And it's so frustrating to me that people think that, consistency is one thing, but our job is to capture this stuff, I mean, I could show you portfolio after portfolio that's, up 40 and 50% in the last couple of years, and you can't do it by trying to make it easy on all these products. Like ETFs are handy and good if you're a lazy investor, but if you were willing to go out into the individual stocks, what you could have done is, some crazy returns. And I argue all the time, you hear this all the time in the investment world, is diversification. Diversification is mostly BS. That's for a bunch of people that don't want to take responsibility for their actions. That's been my concept for a long time. My very first mentor, thank God, was a guy who taught me about concentration of assets, and that was really important. You make money through concentration of bets. Ask Warren Buffett. I mean, that's what he's all about. He made big bets on one stock, made a lot of money making those bets. And meanwhile, the entire industry, because it's run by attorneys, and that goes to the mutual funds, ETFs, individual advisors, that's who runs the business, is the attorneys. So you really can't expect much more out of an attorney making a decision on how you should invest than what you're getting. But one of the things, reason why I bring that up, I just was looking through a lot of portfolio. I mean, we run like 10,000 portfolios, and I can see eyeballs on all these portfolios that are in the system. And I see some really good stuff out there. I'm not sure many people are adhering to them. So anyway, we'll go through the database here in a minute, but I want to talk about this Keven Hassett situation, because I think that I want to talk about the Fed, the economy, what our database is telling us. I want to try to tie all of this together. Database is telling us that we're as a typical, we'll call it a typical robust trend, at around 68% of our intermediate symbols are long right now, and that includes all of the above: mutual funds, ETFs, and individual stocks. The interesting thing about that, the forward looking, I'm telling you, June and July, and last night when we did the long-term analysis, we kept bumping into June and July on a lot of these from a quant viewpoint, and looking at the forward technicals and what's being projected. Everything is pointed to exactly that point. And even I went through some things at looking at, so on every symbol in the WaveTech database, let me just, while I'm talking, I'll put it up here. Every symbol in this database has a map. It has an expectation. It has forward looking. It will tell you how long it's expected to hold, how much it's expected to make, standard deviations, a whole bunch of things. And I showed you one of the new data sheets that I'm working on right now that's basically putting a wrapper over this old product that I built back in literally 1998. First version of this was built and has handled a lot of money. But the whole scenario of what we're seeing here is looking out to that June and July situation, meaning that we're looking at a lot of maturity factors potentially coming in at that point. This is the same conversation, by the way, I had with you in 2024, the election year. And I kept saying, well, we'll get to June and July. We got there, and it was extended out to September. And then the algos, literally on election day, were vertical. They were a classic V bottom on the indicators, and off of the projections that are coming out of there. It was classic. And of course, Trump won. Markets went completely vertical at that point. And a lot of people, maybe it didn't look impressive, but this was weeks and weeks ahead on the weekly chart. And so from the standpoint of investing, the idea of having some looking out, I talked about this last night, looking out the front windshield and driving down that old country road I always tell you, with the bright lights on, looking for the next corner, doing that type of investing is always going to be much better for you to garner profits, instead of looking out and going, this is just like it was in 2023 in July. It looks just like that, and going through this backwards looking analysis idea, which is, as I said last night, it's just, I'm going to call it what it is. It's a stupid idea, okay? It's not going to yield anything for you. It makes you feel good. And what people do, and everybody does, I live in a quant environment. Everything's driven by math here. And when you have a different view, don't have that view and have the math. What you look at is what you think's going to happen, and then you follow people that thinks the same thing you do, and you form your little tribe, and off you go. And maybe you made money, maybe you got hooked up with the right tribe, maybe not. The point is, all this math that I show you every night, this stuff is solid. I mean, I've been doing this for 46 years, but with this database and the things that I show you here, they've been around since 1998. And prior to that, 96, we had a project we did at a regional firm that we were trading the internal components of the Fidelity sector funds. And we figured out how to shred those apart, and then there used to be a service that would tell you what the constituents were. Like, they changed every week, they would update this, and we used to tried to front run everything we could on this, and it was really successful. And it was just by using public data. They put it out, they stopped doing it because they figured out that people were front running everything they were doing. But so, I'm just kind of re-emphasizing what I'm here for. And I'm trying to get out here 4 days a week right now, and I will do that unless there's some complication that comes up. But let's talk about this Hassett situation. And I just refreshed the database. It looks like it's done. What happens with us is we get something that is our data vendor. We have to ping them. As soon as the data packages are available, we just keep looking every minute. Hey, are you there? And we grab the file. So it's been coming in later for some reason. And they did have a pretty big data glitch about a month and a half ago. So I suspect the timing's changed a little bit there. Anyway, let's talk about Hassett. So he's representing Trump, right? So Trump wants rates lower, we know, and there's a whole debate that probably needs to happen. Do interest rates really control the inflation and some of these expectations? Somewhat, but there's a debate. There's a lot of different sides. There's a lot of nuances to that thought. But so his opinion is following: inflation is cooling materially. core inflation is trending lower. I showed you on the charts that we had on there before that CPI is being projected, from my viewpoint, from the algos are suggesting that it's been trending down, but it's going to turn slightly up. Nothing material, I don't think, but it's going to stabilize to get a little bit higher. Goods inflation has collapsed. That's probably true. I did see someone on Bloomberg, fairly smart, in the middle of the night last night, early morning Europe. They were talking about, I think it was Hasbro, one of the toy companies. Yeah, I think it was Hasbro, and the CEO was talking about that they have brought back, and in the continuation of bringing back, because of the tariffs, the evil tariffs, they are bringing back manufacturing here, and in 1 year they've replaced almost 40% of manufacturing, brought it back, and their net effects on the business has been minimal because they're bringing the business back, and that's the point of the tariffs. So they stopped outsourcing and brought them back, and all she said was it's going to take about 2 years, and what they're going to end up with is a much better model, because she admitted to what everybody knows is if your supply chain is outsourced to another country, and any disruption, shipping, 1,000 things can go wrong, geopolitical things. If you bring the manufacturing back, you eliminate a lot of the risk. Once again, that's what Trump said. Bring it back so we control our own destiny. So that was interesting. I'm just going to go down this list because I think it's a good conversation to have from a macro viewpoint and just kind of debate a little bit. So shelter inflation is lagging and will roll over. I'm not sure about that, but maybe so. I guess if you're not flooding the borders and sucking up every room there is in the planet, and the U.S., I saw a meme post on X the other day, and some guy was like, he went to China and he was going, "You got a lot of Chinese food around here. I'm American. I'm a Westerner. I need some Westerner food. And do I get money?" And it was just making fun of everything that's happened here in the States. And so that isn't happening right now. And I think we've managed to get 1 million or 1 million something out of the country right now, in spite of all the craziness that's going on around that. So let's get to the Fed policy real quick, because there's some thoughts that will come out of me by just triggering this. So policy is overly restrictive. Real rates are high. I would say I don't think that's necessarily very true if inflation truly is running this 2.5, 2.7 plus in that range. And I look at the 10-year. You can look at the front end of the curve and say, yeah, it's hot because they're at 3.5. So maybe that should be 2.7. That's been my argument anyway, to neutralize that. So on the front end, there's some, but I still think even if the front end gets down, I'm still looking for at least 2, most likely 3 drops in interest rates this year on the front end and the Fed funds. That does not mean it's not dovish. It's adjusting to that neutral rate. And it's going to feel dovish because the back end of the curve probably isn't going to move much. But I talked to you and we reviewed the 10-year last night, that the 10-year is projecting down to 390 to even 375. So that automatically tells you the front end has got to get down, at least to that 275 rate. I can't really comment as he's saying that small banks are under pressure. Commercial real estate risk. Remember that scenario? When was that? In the pandemic, 2021, 22, the entire real estate market was going to roll over, the commercial real estate, and it's still not good. My brother's very involved in multifamily, and it's terrible in multifamily because of the rates and some of the cap rates and things that are going on there aren't really working. So that market's restricted at the moment, and a lot of projects that you might see started were planned 3-4 years ago because they take a while to get those off the ground. So over tightening historically leads to recessions. There's not a chance of a recession. To even say that is not accurate, because with all the capex that is coming into this country that's going to be built out, that's why you see transportation's doing what better. I talked about that in the sector rotation. There's a lot of things that are going on that just are not necessarily there's nowhere to find anything negative right now. So if we maintain in this choppy range we're seeing in the markets, kind of reflecting a lot of those thoughts. Okay, I'm almost done here. And this is an argument, and I've said this, that the Fed's backward-looking inflation at inflation instead of forward slowing growth. I'm not sure what that means, but anyway, what I think the Fed is doing, I think Powell just hates. We know that Powell and Trump don't like each other, so he's keeping things relatively high. When Wash gets in, which he will, then we'll see a different story come out, and I suspect we'll see rates coming down, and with the capex and everything, we're looking at very robust. And I think we're at that transition point, just to finalize this whole little pitch that I'm doing right now, is that the business environment is also dealing with AI disruption. It is happening. There are jobs that are being replaced, and those people, if they're smart, and I need to do some videos on this, but there are plenty of things that people can do, even if you get displaced. Right now, where we are with AI, although Claudebot is changing things pretty quick, is you still need a middleman. So you need a human being at the moment. That will go away probably in 2 or 3 years, but those folks need to be migrating to another level. So the ones that just sit there and stare at the screen will go down. The other folks that are paying attention, there's a lot of smart. They may have a lot of ideologies, a lot of smart millennials out there, a lot of good kids, and even in the Zoomers, there's some pretty smart people that are flowing around. So they will float to the top. They always do. You have to remember, I'm a boomer. I mean, we came from, the hippie generation, but none of us were supposed to do any good. At least that's what my dad thought when I was like 18 years old. He was pretty sure that I was done. But the issue here is that all of this stuff is going to normalize, and we're all going to be okay. It's all good here. All right, so let's set up tonight's show. I'll try to get through this. 23-minute rant. I needed that. A lot of you usually like those. Wasn't as off the rails as sometimes as I get. So the other thing. So yeah, I see my London buddies are out there. So I'm working on coming your way here soon. So we'll let you know. So yeah, I'll go through some of your. I'm going to review some of the comments here real quick when I went through that rant. Yeah. Okay. All right. So this is a plan as usual. We'll go through the WaveTech database. It has run. Let me get this set up, and then we'll bring it up and get into it here. Yeah, it's pretty amazing. I mean, we had a decent day. We're down right now, 380, but yeah, we'll. Here we go, folks. All right, so database is now up to 61.29 bullish. This is a daily. We had, 1,120 new buys. And these are for tomorrow's opening. And basically 184 exits. So we had bullish ratios. You can see right here, it says bullish, bullish. Bullish ratios on both of the intermediate or short-term models or the daily models. The sectors are still cranking along. Let me see. Yeah, so no new sector sells or anything. So we're just continuing to extend. So some of these, if you notice from my cursor, it says 55 of 32. And that's on consumer cyclical. So there's a number of them that I mentioned last night, like 4 to 5 sectors that are getting long in the tooth, meaning that they've got to their normal mean holding period. And the returns in some cases are way better. If we dug into these, we could spend like 35 minutes going through the database in depth. But that's what the scripts are going to do, by the way. There's going to be a script for all the rotation and all that. There's going to be some really cool things coming out here soon for you. But everything that we're looking at here is solid, getting more traction. Meanwhile, there's still a lot of folks out there trying to tell you that the end is here. This is at the top. And then we even saw, like I said, a lot of positive rotation even in the large cap tech stocks. So tech's not going to die. It may flatten out. There may be some decent rotation happening within the indexes. So this is good. This is good to talk about here. So what's happening if we were to go in, and it'd be pretty simple to do. I could probably just, what I can do is go to our home page here. And this has a list like this 3-2 list of, I'll just click on this. This is going to show us every buy and sell that came out of the database. So over 1,000 symbols just in this section here. So I could actually download this report, throw it in AI, and do an analysis of that. That's going to be another script that I'm building. So what I'm doing with this old clunky piece of software that just keeps going and going and going, the engine is there. The display is wonky. It's like I call it like Craigslist for the markets. It's just a bunch of hyperlinks, but it works. A guy that started Craigslist made tens of millions of dollars off that little hyperlink site. But here it's showing us all the buys and sells. We can sort by this. So this is all the sells. If I sort it this way, it'll do all the buys and then to the sells. But I can export this and I can put it into Claude or whatever platform and ask a lot of questions about what kind of stocks these are, asset classes, all kinds of stuff, and it'll spit out answers and tell it to put it in a nice React dashboard, and you'll have something very intuitive to use. And those are the things I'm building, but there's so much output of this thing every day, and that's why I just go to the top line and go back just to the primary data that comes off of these screens, the high level stuff, sectors and just pure numbers. And we're not, but we could look in, and what I need to do this is to go in, and any of you that have WaveTech, you could just drop that spreadsheet in. It'll give you a CSV format and ask it, if there's, I would be willing to bet that the traction we're getting in both the daily and the intermediate databases are coming from the mid-cap and small-cap stocks. And that rotation is what keeps the system growing. I mean, we get 14,000 symbols in here, 14,300. So it's hunting down everything that is doing, whether it's selling or buying. So you have like this database goes so much deeper than me just talking about the individual high level numbers on the overall database and looking at 61%. But what if we ask which stocks are rotating causing this growth in here? And especially if you have multiple days of data, I mean, you could build a whole nother a bunch of nuanced ideas and probably find some amazing things in there, which I plan on doing. I've been talking about it for literally, this product first came out in 1998. So I've been talking about it probably in the early 2000s. We need to know more about this data. We've been operating at this high level and in individual stock environments, but there's a gold mine here, and I'm going to get it out to you. So keep watching. So let's go ahead and get into let me come up for a minute while I transition the screen. It doesn't look too. But yeah, I think this is still going to be a very interesting year. I don't know if we're going to have another double-digit return. It really, I'll be commenting on that. We'll call it at halftime as we get into that June and July mid-year section. I'll start talking about whether or not we're going to see this thing rotate and extend. I'm pretty good at calling the database because I've been watching it for decades every day. So I'm pretty good at going, hey, I think we're going to rotate here. And that was, I don't know, when I started to see that rotation happening in the small caps, just not in the indexes outperforming, but starting to see some of the data that's coming through as well. And so I think we've got the S&P 600, which is small cap, built all 600 symbols in there. So you can see the rotation that's happening internally in that database. So listen, I mean, it's what, $97 a month. You can do a lot of stuff with that data if you get your hands on it. And I plan on, like I said, putting these free scripts together. And I was talking to the developer last night, and I was up really late last night because we were trying to bust it on this new platform with the new scripts and the freebie scripts for WaveTech and the indicators. And so I'm just trying to get everything going. So I went to bed at 7:30. I think it was 7:30 New York time. And I was up all night. I worked almost 12-hour session last night in the middle of the night while you all were getting good rest, or those of you that are here in the U.S. But this is going to be the way we're going to go forward. So let's go ahead and let's go into not that one, this one. So what I've been talking about for a while, I call it the caterpillar, where it's still continuing. Just a couple of days ago, it looked like these fib targets were going to get hit. You can see it's interesting that the red dot algo, which is projecting closes, is showing us that we're going to see some weakness. I talked to you about this last night. I think this pattern is going to continue. As annoying as that is, that's how it's going to play out, because there's no way that we're going to, I don't think there's a breakdown in this pattern. That's why last night, go watch that section. Looking at the S&P, I wish I had someone to mock up my S&P and put timeline markers. I used to have a guy that did that. It's just no energy for that next level of, I need to get someone that does that for me. So if you'd like to do that, maybe you could reach out to me. But the point, info@Kendall Report is the email at the moment. But this pattern is not one that is telling us anything about new directional movement. It's basically telling the story of more of the same, which is chop, chop, chop. This goes back, if I zoom over here, this is that October. So we had one big spike under it, which was another tariff scare that we had in around November, and then just chop. I mean, look, just 3 days ago, we just rebounded right back into the pattern. We come back down. Now this is interesting. So let's talk about this pattern right here, and then we'll bring up the indicators from that. But this pattern is starting to drift lower. If we went back maybe last week sometime, this pattern was very flat, just projecting. We're finally starting to see a little bit of a slope on the S&P where it's trying to configure down. And I always look at these patterns. Those of you have been around when I was live during market days, and I had my 5-second chart, and I saw somebody on Discord comment about the 5-second chart. The amount of pattern understanding and learning you can get from sitting there with a 5-second chart. You have to have a premium account and a real-time data feed. But what you can see the patterns, you can see the algos work in real times, how they're adjusting, recalculating. It's fascinating. You start to get a feel for how everything comes together. I could sit there, believe it or not, watch that chart for hours. It's like fascinating. I have always had this pattern recognition, like savant-like pattern recognition, and that's a lot of in the old trading room. Some of you probably saw that in my live trading room I had a couple of years ago. Is I'm looking at the order book and the patterns that are coming out of the 1 minute, 5 minute trade intraday. And so once you develop some kind of technique, you watch these screens and you start to see patterns and recognize them and journal. And that will change your life from a standpoint. Even on longer term trading, you start to see these patterns unfold, even on where there's not so much noise, but it's fun. But this pattern here is not a directional pattern. It, just like I told you about the silver and the parabola, I spent some time talking about that several weeks ago. We're seeing something different here. This is that trendless pattern, and it's random, and you literally can buy low and sell high in these environments. This is like when you see it really stretching and you're going, man, this thing's going to get hammered. That's when you take the mouse and you buy. I have this is a technique I used to talk about in a live room, is learn how to fade yourself. So if you know you keep thinking it's going to go down, you sell the low and it flips on you, do the opposite. Learn from your mistakes, and you can literally fade when you're really feeling like this thing's going to go down hard. I get the hammer out and start pounding on it. It's a different way of trading. It has very little sometimes to do with PPMs, but these patterns are, when you get like that, you have to also feel the internal anxiety that builds, and you learn how to use that anxiety, especially day traders. You learn how to use that. It works actually on longer term trades as well. So back to the world. We're seeing maybe one more day of upward pressure, then all the indicators are being projected just to collapse in. So all that tells you, doesn't tell you it's going to collapse, but it tells you momentum collapses. So this is what a range bound market looks like. And these things can already went on for months. They can go on for 6 months. And I was actually, this sounds rude and mean, but I was hoping that the younger traders would get a lesson. Since they're mostly trading crypto, they needed a lesson. And I think I talked about this before. These patterns make me think of these things. Is like there was a stock, the most loved and then the most hated stock on Wall Street was Kodak, the camera company, back in the 1970s. 70 to 74, that thing collapsed in 73, 74, and people are still waiting for that stock to come back. And the best thing that happened, it was a favored stock, it collapsed, and you couldn't buy the bounce. So everybody's been taught, you buy the dip. The bigger, the better. Everybody thinks that right now. It's so prevalent on the street. on every influencer, especially any influencer under 45, that have decent channels and decent voices. Not saying they're bad, but that's what they're telling you because that's what they're taught. And they'll tell you, I've been around doing this for 15 years. Exactly. That's how you think it works. So I've been hoping that like Bitcoin just gets hammered, stays at 60,000 for the next 8 years. And then at that stage, maybe it'll bounce. But that lesson needs to be learned when you're young. So you don't think you can just buy the dip. And once you buy the dip and get stuck, then you'll understand life at a next level. So as far as I'm concerned, I'm going to brush this up because we're 40 minutes in. I'm going to focus on a couple other areas that I've been wanting to do. And we're going to look at the NASDAQ. We'll touch on the IWM, or we'll maybe put the Russell up. And when we do that, then we'll have a feel for what the equity markets are doing. I hope you guys are having given me good things to review here in a little bit. Give me questions, anything on your mind. So these kind of patterns they're disabling from a psychological level. The psychological warfare that goes on all of our minds every day in doing these markets is pretty brutal. So NASDAQ, similar, got that spike, and then momentum is going to fall back, and we should stay this configuration of the moving averages. I am going to bring up my tool. Hang on one second here. All right, so this is, I love these. I'm so grateful for my friends in Germany that helped me build and brought these ideas to me, because it's pretty amazing, these algos. But this little pattern, I showed you this last night. This is, instead of drawing a wedge around where you are, this is like, what this is defining is the range that we're probably going to be in. I think we ultimately get to a point here, we got a decision to make. Don't know which way. Right now, the algo's showing us this final spike, and then momentum is just going to flatten out. And that puts us right in. If we probably took the midpoint here, I'll bring this up so I can give you a number and what that number is right now. In just a minute, as soon as we get done with this illustration. So but this is most likely, all of these indexes have similar patterns right now. This is what we're doing. We're going to see the constant collapse of momentum and just squeeze down. And we come out here, it's not quite on this chart, but we're looking, this is May. So once again, we're getting out to that June, July time frame. And when we did the little longer view last night and looked at that, what we were seeing, especially on the weekly charts that had that pattern, it was a similar pattern to this, came right out. So I would go back and watch the S&P section last night. I don't want to go over it again tonight, but this is where we are. And screaming again, straddles, option spreads, take the premium, take the money home. I've told you before, my old buddy used to come in on Friday night singing a song, "You can pay me now or you can pay me later, but you're going to pay me," because he was short a lot of premium. And even on the weekend, premium falls when the markets aren't closed, when the markets are closed. And the reason why is premiums are time. They're every day, not market days. They're every day to that ultimate expiration. So that's why you come in on a Monday morning, the stock's up and the options are all down because of that premium decay over the weekend. Uh, I mean, the pros, you could a hard time getting a pro to buy premium without at least some kind of hedge on it. Maybe a ratio of 2 to 1. Maybe you do 2 calls, one put short, something to take out that premium decay. Anyway, all right, let's move on. We'll go to IWM. Let's do the cash. Let's do Russell. So Russell, I want to bring this up too. So when I'm going through the indexes, it's worth watching all of them because a lot of these things go along because I'm doing this analysis live with you. I haven't looked at the charts beforehand, decided anything, just doing live analysis. But we see the spike up in the Russell and then it collapsed in. And that's what I was talking about on the very opening tonight, is that you get these big surges. Those guys out there, that top end is still defined. There's sellers up there. Like right now, we were down 6, we're up 2. Now we're kind of bouncing around. But it looks to me like there's going to be maybe a retest of the low that we did earlier toward the close today and on the reopen. So that number gets challenged. I think you could see as low as maybe on the S&P 60, 65, 68 again. It's trading 96 right now. So there's potential 30 handles down. But this pattern here is the same way. We've got that same spike on the ALCOs and then collapse and flatness. You can see the white dots here. This is the 10 WTAR 10, which is the 10 simple moving average with a projection with machine language learning off of this spike. This little spike was enough to keep that moving average going up. And so we'll see that adjust over time depending on where we close along these lines. But this is still nothing robust. There's no breakout. I think I brought this up before. Let me grab this. There's some fib targets up here on the Russell all the way up. You can see over on the far right-hand side here, we're looking at 2980, 2920, 2825 is the minimum. So these were islands before. We had what I call island projection. You got 3 bars, it went away. This one's got 3 bars. You'll have to take out this low right here at 2611 to negate this. And this is the cash, it's not the futures that we're looking at. All right, so let's move on. Let's get to gold. So gold has these projections on the upside, but what I'm showing you here is this is something, if we go back, those of you who've been on the channel every day, you know that when we got this big blast up to 5620 here, I think that's 5620, and the market grid expanded out really wide. That's that volatility bubble that I talk about. I said before we'll make the next directional move, all of this will have to collapse in and normalize. We're still at a much higher level. Normalize, it looks more like these little bars here. We're still very wide on a daily range basis. That's a very wide range. So there's still more contraction to happen. We still have those rising moving averages in there. And we come over here to the indicators. we see them maintaining in trend mode. Like this, all of this choppiness here, all that's telling you is that the 10 period moving average is in trend mode. And right now there's over around 60% probability that you will come back to the 10 period moving average on a closing basis. It's almost impossible. I'll show you something here. So the 10 is this white line. So what I want to do is I want to make this a little thicker here just so we can see it better. I made the wrong one big. What I want is the 10. Where's the setting for that? All right. So what we're watching here is this 10 period moving average, which is right here. And we can look, this has been in trend mode here. We got one little close under, back above, close under, right at it. Right now we're just kind of trading right on that 10 period moving average. And the reason that characteristic happens, this is something I studied when in 1984 through 86. This is what we were trying to figure out, how the markets traded around these averages at different ppm levels, and this is at a 0.25. It's hard to stay under like 2 days. If you get 2 days in it, then the indicator's probably dropping below 0.25 and starting to show further attrition in the momentum. Now we have the algos, we can kind of see at least the potential for the next couple of days, what's likely to happen. So with that kind of input, you know how to handle yourself, especially if you're short-term, you're a scalper or even a swing trader. But you can see, coming back to this is finally contracting into something that we are going to get a potential movement, but it's still down the road. You can see we have slight bias to the upside, so buy the dips on. I think it was, let me go over there real quick since I'm getting into this mode. So this weekly 10, you see this thing's a monster. It's just vertical. At one stage when we printed this bar here, when I ran the daily sheets, we got an exponential warning, which was about to throw us into that parabola regime, and it popped right out of it the next day because that was the day of the reversal. So it literally only got into that parabola one day and then corrected itself, went right back to the pattern. So it was like, I used to have a comment, I used to say that the market just erased that day being relevant. If you do like a close only chart, you can see when you take that spike out, the trades are still right in that range, even though we spiked all the way to 5,600. You know, we got that day closing was 4,900, so we were like $600 off of that. So so the market corrects itself when we see those 5,600 highs. It gets the dopamine going and all the emotions flowing exactly where you make mistakes. But you can see from the flow here, there's still a strong trend underlying in gold. So it's just consolidating. This is a weekly. It's consolidating on that daily pattern just enough to get to the decision point, and it still looks like the decision will be continuation to the upside once this momentum and basically I call it these strong deviations happening within the pattern. Once they normalize, then you can go back to trending again, because they break when they go that big, they break out of that of a normal trending regime. Everything that I built my career on goes out of focus until that thing comes back in. That's why I talk about it. Normally, the markets will go back to the regime it was in and continue on, especially if you go to the next time series higher, meaning you're looking at a daily, you go to a weekly, look at less noise in the data, fewer data points is good in some circumstances, and other you want more. You want the frequency. Like day trading, you want high frequency data points. But on this stuff here, you want to make sure you're getting just enough noise to determine when it's out of balance and imbalance, and not too much noise where it's just noise. That's where you get in trouble. And that's what we're seeing on daily charts, what I described to you in the beginning of this podcast. So let's go SI, go to silver futures. Stay with weekly. This thing's still broken. Your ceiling's around 81. I talked about this last night. Let's go over to the daily. Just a lot of noise here. Algos are still, we've got this 40 period slicing through here right around 84. So we're still maintaining. We've got more momentum, and then we're going to see everything start to fade. The biggest concern on this page is this red indicator here and ppm 2 and 3, which tells us that these overhanging the 21 period moving average going down and the 40, they are building resistance through that angle of attack that I've taught you people about that have been around this channel. So the angle of attack is showing you exactly what's going on here. Let me see if I can pull off something successful here. I hate this when I can't find this page that's there. 1 second. Well, I'll figure out how to use Substack one day. Oh, here it is. Okay. I'll just use this real quick, and I'll blow it up. So this is what I'm talking about, folks. This angle of attack. When you get into these, this is the parabolic or the parabola. When you get into those, there's exhaustion points. And like I said, as soon as we get this new script out, I'll share the script that I built for the analysis of silver several weeks ago. But this is a typical run. So right now, we're right at this 0.25 right here. And that's why we're acting like we are around those moving averages and everything I was just talking about. And then when we get stronger moves, expand it in others. But so let me put that back where it belongs. Okay. So resistance all building overhead between right now 85 and high end 87, but every day that number is coming down. For one more day, it's going to flatten a little bit in downward pressure. Then we're going to see pressure building again. I think what we do is end up just trading in this sideways band. I told you last night, if we break through this level here, which would be you break through 71, then you're probably going to test this big spike low here, which is 63, and the green dots are 62, which is a pivot. And below that, you got the 200, which is down at 50. I'm not sure we're doing any of that. I'm just saying this is a sideways trend right now. but you have to watch those data points. If they get broken, then the probabilities are going to go up. Okay, finally, Bitcoin. We'll do some questions. Bitcoin's got trying to build a base. I talked about this. We have 3 objectives up here, fib targets right now. The big challenge will be getting through the around 66,806 and then 70,000. And then above that, then we got 73, maybe a 78, get up to this 40 period moving average. Maybe that will probably be the top end. So the big wedge here, you can see where everything's heading to 63. I think it probably draws a center line right here, and that's where we'll end up. All right, let's go in and let's see here. Right at 1 hour. Bear with me 1 second. All right, had to fuel up there. Throat was pretty dry. See what you got, guys. Hey, Coachella Valley. Let's see here. That gas. I'm just looking through some stuff here. Yeah, I don't think we end up with war in Iran. I don't think so. I don't think they're that stupid. I don't think, I mean, what, Trump's already parked two aircraft carriers there. Let's see, maybe I'll go back and cover some crude oil, a lot of chatter on crude oil. Let's see what else here. Yeah, so Iron Trader's talking about the TQs. Those are leveraged instruments, not the typical ETFs. I love trading those too. Those are good, especially when Nasdaq's like cranked volatility. Ukraino TV, I'm not sure what you mean there. Will you finally, Bob will finally undervalued MSFT bounce. I don't know what that means. Let me look a little bit deeper here, folks. Bear with me. I'll get a couple things and I'll answer his questions. Yeah, banks aren't going to crash. There's no concern there. Yeah. I don't remember 2008. That was one of my biggest trading years ever. Yeah, banks are not only strong, are about 10 times bigger than they were before. And the structure the whole thing's been restructured, so that's not an issue. Yeah, there's no, if you think about mentioning '08, '08 was a period where there was excess lending with the ninja loans and all the crazy stuff. And I was at pretty much ground zero because of being in a Scottsdale, Arizona area. We were way overplayed. That in Vegas were took real big hits. 50% minimums. Let's see here. Yeah, it looks like I've answered a bunch of this stuff. Let me look through a couple more, then I'll come up with some closing statements. Yeah, when does NVIDIA's earnings come out, by the way? Somebody mentioned that. Yeah, if you're rallying NVIDIA into the earnings, here, I know how to do it. Let me look at something. Yeah, so earnings on Wednesday, February 25th. Yeah, and NVIDIA, let me just put this on the screen here. Yeah, NVIDIA has that same choppiness pattern going. This is December. We go back to October is much higher, but this whole scene is almost exactly mimicking the basic choppy pattern that we have in the S&P and all the indexes. And look at the volatility line. For the moment, this forward-looking stuff is being heavily influenced by this crud that we have here. Until we start to see some directional movement, we're not going to get much out of the algos other than it's just saying more of the same until something breaks, and we haven't seen a break just yet. All right. Let me just look at a couple more things. We'll call it quits. We'll wrap up here. Yeah, I don't know. I see Green Garden, you're asking about a way to alert to. That would be a good indicator to figure out the build, actually, and put alerts. And that was probably something that was a mistake. If there's an upgrade on the indicators, that would probably be nice to have something in. I mentioned this to you before, and I'm not sure what I'm going to do with it. Still needs to be some research on it, but I have built the basic 1.2. I've got it to mimic the TradeStation version pretty well. And that would be all you would really need. That at least would give you buy and sell signals. And that's something I'd like to see here. Let me just look at something. There's a symbol here. I think somebody asked about this last night. Let me go on screen. Yeah, so XLF. Nice run for sure. Did get right here, you got a little V top right here yesterday on a high close. I don't know what the percentage is, but it's just from memory of decades. Whenever you see these markets and they spike up and they close on the high, it's almost like the Statue of Liberty play. It's just like straight down after that. This also, we had sort of a V tops on these indicators. It's kind of hard to see. I would have loved to have seen the original projection. And when you do the replays, the calcs don't look the same as real time. I don't know why, but probably because not enough people have complained to TradingView about it. But the replays, the indicator looks, the values, the forward-looking stuff gets skewed on the replay. It's like it doesn't, it doesn't look the same way it does if we're looking at right now. If we could go back one day, you'd see that those dots going down suggesting that that was a peak value. And that's what those, by the way, that's really what the, especially when you get lined up on the V bottoms, you're getting all the indicators, ppm 1, 2, 3, and even a 200, all doing a V bottom or inverted V. And those things are powerful when you find them. And you can find them on a 5-minute, daily, weekly. But this was probably pretty prevalent. It doesn't look too material, but it could be. It looks like we're probably going to test the 10-period moving average here. So what is this sector on? You said, was it nat gas? Is that right? All right, so let's come up and I'll look at one more thing and then we'll call it. Boy, that's very, very inaccurate statement. Always look at the past because where it's been is where it's going again. No. Prove that one to me. Send me an email and prove it. There's so many nuances in that statement to rebut that. It's not even funny. Okay. That's the same thing with gaps always get filled. No, they don't. There are many gaps that are around for 100 years that never filled. Yeah, so yeah, somebody just said technically it starts at 5 p.m. We're going to start a little late because of there's a data glitch going on with us getting data every day. It's really messing up the flow. So we'll start. I'm not. I'm half of the year I'm on the East Coast. The other half I'm in Denver. We're in Arizona. We don't change our clocks, so we have to move. We don't have to move our clocks, but we have to change our habits. I'd rather move a clock, to be honest with you. I'd rather still be even on Pacific time or Mountain time and just change the clocks with everyone else. So in the summer, markets open at 6:30 and close at 1. And the winter, it opens at 7:30, closes at 2. And for about 3 weeks every year on the change, I'm sitting there, why is the market still trading? Because we switched the clocks. Or why is it not trading? It's pretty funny. Okay, here we go. All right. So we'll call it quits here, folks. Thanks a lot. I said I wouldn't go an hour and a half, hour 13, but I like trying to cover some of these questions. Hopefully I'm doing a good job there. But I'll be back tomorrow. We'll try to wrap up the week again, if you can believe that. Well, I guess we only have 4 trading days, so that makes sense. But yeah, so we'll come back in tomorrow and see what happens. I don't expect a lot, to be honest with you. I think we're still chopped in this range. I think the fact that we saw the heavy selling coming in when we were up, I know the S&P was pushing up about 1%. If you looked at the market grid on the data sheets in Substack, what you would have saw is there was a 70 or 80% probability that we would see. I got to show you this because I was supposed to show this to you earlier. But 69.17 had something like I think we went 21. Yeah, it's not going to work out. So anyway, we'll leave it because then I'll end up going 10 more minutes. All right, folks. Thanks for watching. Appreciate it. Make sure you like and subscribe if you haven't. It's free. and it helps the channel. So it's actually starting to build back that I've been pretty consistent. I wonder how many people don't know I'm back on. So unfortunately, YouTube doesn't have a very good way to reach out to subscribers. That's something they need to fix. Anyway, folks, have a great evening. See you tomorrow, same time. Substack will be out in several hours, and we'll talk to you then.